And welcome back to the Market Wolf, where I normally give you the best bear case, the best bull case, and my opinion. But today, we're doing a little wolf pack chat. And I want to talk to you about some of the things I've been speaking about when I'm breaking down the charts. And that is this article written by Lim Yu Kwan, because I think it really illustrates well exactly what I'm talking about here. Impact of Silicon Valley Bank's collapse on stable coin supply. And really, this graph sums it up nicely. USDC supply drops 9% amid SVB crisis. TUSD and DAI gain the most. So, first of all, what I want to share with you is that their methodology. The study looked at the six largest stablecoins, US, by market capitalization and examined their supply chains. The data was taken from CoinGecko for the period of March 10th to March 13th, 2023. So that's where this information is coming from. But when you look at what happened, look at the just massive outflow of 3.9 billion in supply amid the Silicon Valley Bank collapse. Okay? Just one tweet, okay, causes panic across the crypto community, and USDC's price fell to as low as 87 cents on the morning of March 11th. As USDC depegged, the market sell-off saw its supply record a net outflow of 1.9 billion by the end of the day, or a decrease in 4.4% overnight from 42.7 billion on March 10th to 40.84 billion on March 11th. And of course, the regulators stepped in. They tell you everything's going to be fine. And of course, everything was over time. Things got fixed. But really, what this shows is the flow. And this is why Bitcoin moved up. This is why many of the banking coins moved up. This is why we even saw some of the shite coins moving up, okay? Because money was being moved around. People were trying to get out of certain things. You only have so many options and ways to move your money, and people are likely looking for the most stable ways to move that money. So you see a plus 27% increase in DAI. You see a plus 57 increase in TUSD. And when the banking crisis happens again, and it will, that was just the first round, you're going to want to find a stable coin that you can trust, especially one that is not pegged to the United States dollar. Because if you've been following us here, you know that the United States dollar is going to go down. I'm going to take you to the DXY, just in case you haven't seen it, so you can see what I'm talking about. Yes, there's going to be a rise up in crypto, but you also have to understand there's going to be a big collapse in certain crypto coins as well, and you're not going to want to be on that ride. Remember that a good portion of the crypto market is locked into the dollar. Okay, yes, it can move around to different things. I believe there's a stable coin that's a euro, and that might be something to seriously look at. Along with some of these other stable coins that have done well historically in times like that. Look at that as a piece of history to help you through what's coming. Look at this 12-month chart on the dollar. What do you see? Clearly, we see that we are in a descending wedge. And it looks like we've got plenty more room to come down. The MACD, you can see it looks like, oh, we're really winding up to the upside again. Look at how strong a move that is for the dollar. And the RSI got a bounce. And okay, yeah, that's wonderful. We're inside of an upward channel here. However, what you have to realize inside this channel, so as you can see here, we came all the way up to the top of this channel. We've already tested it and we fell down. Now what's left to do? Well, what's left to do is to come back down and test the bottom. Could we go up and test it again? Sure, we could flag out, we can make a move back up and try and test the top of that descending wedge that we've been in, but odds are we're going to continue down. Let's take a look. See, so this is the 12-month, but if you just let's look at the 1 month, for instance, so we can get a better view of this. You can see we're on a bear flag on the monthly. You can see we're starting to wind to the downside on the MACD. You can see that RSI is really just at average. So could we flag a little more? Sure, we could chop around here a little bit more, probably between, I would say maybe the 102.441 very easily, and all the way down to the 101.542 we could chop around on kind of a big bear flag here for a while. But with what we know about what's happening in the economy, the dollar is eventually going to break down. Now, does that mean it can't have a move up and complete a cup up here higher? No, absolutely. It can come back up and test this first and then get rejected. You could be putting in a massive M-top reversal here. That's a possibility. That's why we have to pay attention to this area, because this is going to tell us a lot about what's going to happen in the market. And when those bank failures start coming in, you do not want to be in the dollar. That's not a time to be in the dollar. That's the time to get away from it. And we don't know if they're going to collapse tomorrow. We don't know if they're going to collapse 6 months from now or 3 months from now. Somewhere time in the fall, maybe, right? Maybe then. But it's all just speculation. We can't know for sure. We just have to watch the charts, watch the news. You have your plan in place. So, just to wrap this up, remember, when this happens again, it's going to be a selling opportunity if you've been buying on the downside like you should be right now. When the crisis hits, people are going to be moving their money around. Many of them are not going to have a plan. It's just going to be straight fear that they're working off of. And you can capitalize off that fear if you stay calm and you have a plan in place for whatever happens, the bear case or the bull case. So I'm the Market Wolf. We'll see you next time.